Are you a beginner in the world of finance and wondering what all the fuss is about when it comes to the stock market? Well, look no further. Understanding the stock market can be intimidating at first, but once you grasp its basics, you'll realize that it's an excellent way to grow your wealth. In this blog post, we will break down everything you need to know about investing in stocks so that even if you're a newbie, you can start making wise investment decisions. So buckle up and get ready to learn how the stock market works and how it can benefit your financial future. The stock market is a complex financial system that allows companies to raise capital by offering shares of their business to the public. In simpler terms, it's a marketplace where investors can buy and sell stocks in publicly traded companies. When a company decides to go public, they offer shares of ownership in the form of stocks that anyone can purchase. The value of these stocks fluctuates depending on various factors such as supply and demand, economic conditions, and company performance. Investors who buy these stocks become part owners of the company and have voting rights regarding major decisions like electing board members or merging with another business. On the other hand, selling stocks means giving up ownership in exchange for cash. The stock market provides an opportunity for businesses to grow while allowing individuals to invest their money into potentially lucrative opportunities. However, investing comes with risks, so it's essential to understand how the stock market works before diving headfirst into any investments. How does the stock market work? The stock market can seem like a complex and confusing concept to understand for beginners. However, once you break it down, the basic principles are quite simple. Companies can choose to go public by offering shares of their company for purchase on the stock market. These shares represent ownership in the company and give investors certain rights such as voting power. When an investor buys a share of a company's stock, they essentially become part owner of that company and have the opportunity to profit from its success. The value of these stocks fluctuates based on various factors including supply and demand, economic conditions, and overall performance of the company. Investors can buy or sell these stocks through a brokerage firm or online trading platform. When buying or selling stocks, it is important to consider things like transaction fees and potential taxes on profits. Understanding how the stock market works requires knowledge about individual companies and broader economic trends alike. By staying informed about both macroeconomic indicators as well as specific firms' financials, you will be better equipped to make informed investment decisions in this exciting world of finance. What are the different types of stocks? When it comes to investing in the stock market, it's important to understand that not all stocks are created equal. There are several different types of stocks available for purchase, each with its own unique characteristics. The first type of stock is common stock. This is the most basic and popular type of stock available. When you buy common stock, you own a portion of the company and have voting rights when it comes to electing board members or making major business decisions. Preferred stocks are another option. These stocks pay investors regular dividends and have priority over common stocks when it comes to receiving payouts from a company's profits. Another type of stock is blue chip stocks. These refer to well-established companies that have a history of financial stability and strong performance in the market. They tend to be less volatile than other types of stocks but also offer lower potential returns. Small cap and mid-cap stocks refer to smaller companies with a smaller market capitalization compared to blue chip companies. While they may offer higher potential returns, they can also be riskier investments due to their volatility. Understanding the different types of stocks available can help you make informed investment decisions based on your personal goals and risk tolerance level. How do you make money in the stock market? Investing in the stock market comes with the potential to make a profit through capital appreciation and dividend payments. Capital appreciation refers to an increase in the value of a particular stock, which can result from various factors such as company earnings, industry growth, or overall market trends. Dividend payments are distributed by some companies to their shareholders as a portion of their profits. To make money in the stock market, investors need to choose stocks that have good potential for growth or income generation. Investors can do this by researching different industries and companies' financial performance and analyzing market trends. Another way to potentially earn money in the stock market is through trading stocks based on short-term price movements. This approach requires more knowledge about technical analysis and monitoring real-time news events that could impact stock prices. However, it's important for investors to remember that making money in the stock market also involves taking risks. Stock prices can be volatile and unpredictable, so investing always carries inherent risk. It's essential for investors to carefully assess their own risk tolerance before investing any funds into individual stocks or broader markets. There are several ways an investor can potentially earn money through investing in the stock market, but it's crucial always to keep an eye on both rewards and risks associated with each investment decision made. What are the risks of investing in the stock market? Investing in the stock market can offer great rewards, but it also comes with risks that every investor should be aware of. One of the biggest risks is volatility. The value of stocks can fluctuate rapidly and unpredictably due to a variety of factors such as economic conditions, political events, and company performance. Another risk is the possibility of losing all or part of your investment if a company goes bankrupt or fails to perform well. This is why diversification is important. Spreading your investments across different companies and industries helps reduce this risk. Investors must also consider the impact of inflation on their investments. Inflation can erode the purchasing power of your money over time, which means that even if you earn returns from your stocks, they may not keep up with rising costs. Investing in the stock market requires careful research and analysis before making any decisions. It's important to understand financial statements, market trends, and other factors influencing stock performance so that you can make informed decisions about when to buy or sell shares. While there are risks associated with investing in the stock market, with proper knowledge and strategies, these risks can be minimized for potential long-term gains. How can you start investing in the stock market? Investing in the stock market can seem daunting, especially for beginners. However, with some basic knowledge and research, anyone can start investing in stocks. The first step is to open a brokerage account that will allow you to buy and sell stocks. There are many online brokers available that offer low fees and user-friendly platforms. Next, it's important to do your research on companies before investing in their stocks. Look at their financial statements, earnings reports, and industry trends to determine if they are a good investment. Diversification is also crucial when investing in the stock market. Don't put all your money into one company or sector. Spread out your investments amongst different industries. Another option for beginner investors is to invest in index funds or exchange-traded funds, ETFs. These funds track an entire market index such as the S&P 500 or NASDAQ 100, which can help reduce risk by providing exposure to multiple companies within one fund. It's important to have a long-term perspective when investing in the stock market. Don't get caught up in short-term fluctuations. Stay focused on your goals and stick with your investment strategy over time. Investing in the stock market can be a lucrative way to grow your wealth, but it's important to understand the basics before diving in. In this article, we covered what the stock market is, how it works, and the different types of stocks you can invest in. We also discussed how you can make money through investing and some of the risks involved. If you're interested in getting started with investing in finance, there are plenty of resources available to help guide you along the way. You may want to consider working with a financial advisor or using an online brokerage platform that offers educational resources and tools for beginners. Remember that investing always involves risk. No investment is entirely safe or guaranteed. But by understanding how the stock market works and doing your research before making any decisions, you can make informed choices about where to put your money and potentially reap significant rewards over time. So, if you're ready to take control of your finances and start building wealth through investing in stocks, now is as good a time as any to get started.